Good afternoon, everyone. I am Jacqueline A. Olarte, and our group was tasked to discuss the topic substantive test of accounts and the statement of profit or loss and comprehensive income. And I was assigned on a case. It was a case number 7. So here is my problem. You have been engaged to review the records and prepare corrected financial statements for the XOR Corporation. The books of account are in the agreement with the following statement of financial position. So we have the title, XOR Corporation Statement of Financial Position, December 31, 2017. The amounts are in thousands. So these are the assets. We have cash amounting to 5,000 pesos. Accounts receivable, 10,000 pesos. Notes receivable, 3,000 pesos. Inventory, 25,000 pesos, a total of 43,000 pesos. For the liabilities and capital, we have an accounts payable amounting to 2,000 pesos, notes payable 4,000 pesos, share capital 10,000 pesos, and retained earnings 27,000, a total of 43,000 pesos. So it is balanced, the asset and the liabilities and capital. Additional information. A review of the books of the corporation indicates that the following errors and omissions had not been corrected during the applicable years. So we have year 2014, 2015, 16, and 17. So for 2015 and 2016, we have an inventory overvalued amounting to 7,000 for the year 2015 and 8,000 for the year 2016. And we also have an undervalued in inventory 6,000 for the year 2014 and 9,000 for the year 2017. And for the prepaid expense, we have 900 peso for the 2014, 700 for 2015, 500 for 2016, and 600 for 2017. We have also a prepaid income, 400 peso for the 2015 and 300 for the 2017. And for the accrued expense, we have 200 pesos for 2014, 75 pesos for 2015, 100 peso for 2016, and 50 pesos for 2017. And lastly, we have an accrued income of 125 peso for 2015 and 150 pesos for the year 2017. The profits per the books are 2015, 7,500. 2016, we have 6,500. And in 2017, we have 5,500. No dividends were declared during these years and no adjustments were made to retained earnings. So required, prepare a worksheet to develop the correct profits for the years 2015, 2016, 2017 in the adjusted statement of financial position accounts as of December 31, 2017. Ignore the passable income tax. So here is the solution. Title, XOR Corporation, worksheet to correct net profit and balance sheet accounts from the year 2015 to 2017. So we have a column for the net profit, and we also have a column for the adjustments to balance sheet accounts. For the net profit, we have the years 2015, 2016, and 2017. And it is also written there the unadjusted balance as per given in the problem, which was 7,500 for the 2015. And for 2016, we have 6,500, and 2017 we have 5,500. This one there. So we also have an inventory of 25,000 unadjusted balance and 27,000 for the retained earnings. First, we have an inventory overvalued on the year 2015 and 2016. So to correct it, now we have an overvalue for 2015 That is why we have to deduct the 7,000 because it is overvalued. And on the following year, 2016, we have to add it in order to fix the error. So we have to counterbalance it in order to equalize. That is why on the year 2015, as you can see, it is being deducted, and for the 2016, it is being added to in order for the closing books to be not affected in that year. And also for the 2016, we should also do the same for the 8,000. Since we have an overstated inventory in 2016, we have to deduct it, and on the following year, which is 2017, we have to add it in order to equalize or to counterbalance the error to fix it. And then we have also an undervaluation of inventory. On the year 2014, we have 6,000. So since we have an understated value of inventory in 2014, we have to add it in 2014. But as you can see, it is not being stated in the table because it only includes on the year 2015 to 2017. So in 2015, we will deduct it because on 2014, it was being added in order to balance the amounts or in order to fix the error. And for the year 2017, we have also an understated inventory amounting to 9,000. That is why in 2017, we add it here, as you can see. But we will deduct it in the year 2018 is not included. So it's just on 2017, we have to add it because it is understated or undervalued. Also, as you can see, the inventory has been added for 9,000 for the year. It is for the year 2017 for the balance sheet accounts, as well as the retained earnings. It will be added 9,000. Next, we have prepaid expenses omitted at the end of the year. So we have prepaid expenses for the years 2014, 15, 16, and 17. So 2014, we have 900. So prepaid, as you all know, prepaid expense is the expense paid in advance but not yet incurred. And as we all know, expenses must be recorded in the accounting period in which it is incurred. Since the prepaid expenses has not yet been incurred, that is why the prepaid expense will be recognized as expense in the following year or in the next accounting period. So we have at 900 for the 2014, it can't be recognized as expense yet. So it will be recognized in the year 2015. So as you can see here, the 900 is being deducted on the year 2015 because it is an expense. So we have to deduct it in the profit. And for the 2015, we also deducted. We have a prepaid expense on the year 2015. Since it will not be recognized on the 2015, we will recognize it as expense in 2016. That is why it is being deducted here, as well as for the year 2016. We have to deduct the 500 in the following year, which is 2017. And also, we have a prepaid expense of 600. We have to add it there because it is not yet incurred. That is why it is being added on the year 2017, the amount of 600. And as you can see here, this is the table for the retained earnings. We have to add it since the 600 is not yet recorded as an expense. It is being recorded first as an asset. That is why it is being added to the retained earnings. And for this second column here, this is for the column for the prepaid expenses. Next, we have the prepaid income omitted at the end of the year. We only have years 2015 and 2017 for the prepaid income. So as we all know, prepaid income is the revenue received in advance but not yet earned. And as we all know, the income must be recorded in the accounting period in which it is earned. So this prepaid income will not be recorded, or this will not be recognized as income for this period, but for the next accounting period na. That is why if we have a prepaid income for 2015, it will not be recognized as income. That is why it is being deducted here and being added on the next year, because we can add it on the 2016. Since it is an income, we have to add it to the net profit for the 2016 year and deduct it on 2015, because since it's not recorded as income, as we all know. And for the 2017, we deduct it also because it is not still recognized as a income in that year. And 300, it serves as an expense. That is why it is being deducted. And also in retained earnings, we have to deduct it. And for this next table or next column, it is for the prepaid income. Next is the accrued expenses. So, as we all know, accrued expenses is the expenses which has been incurred but not yet paid. And to go back what I have said, expenses will be recorded when it is incurred. So in this accrued expense, it has already been incurred, and the accrued expense must be recognized in the period in which it occurs rather than on the period it is being paid. So the accrued expenses will be recognized for which year it has occurred. We have on the 2014, 15, 16, and 17. So in 2014, it is being deducted since it is expense. So in the year 2015, we have added the 200 peso because it has been deducted in the previous year. That is why we have to add it in order to counterbalance the amount, in order to fix the error. Also for the 2015, we have 75 peso. We have to list it on the year 2015 because it is recognized as expense na. That is why it is deduct and add for the 2016 to counterbalance it. Same goes for the year 2016, the 100 peso amount. And the 50, it is being deducted since it is already expense in that current period. And we also deducted in the retained earnings since it is an expense, and this column is for the accrued expense. Last is the accrued income. We have accrued income for the years 2015 and 2017. For 2015, we have 125, and as we all know, accrued income is the income which has been earned but not yet received. And to say it again, income will be recorded or must be recorded in the accounting period in which it is earned. So in this accrued income, it has already been earned but not yet received. So this accrued income will be recorded or will be recognized on the period it arises rather than it is being received. So it will be recognized on this year 2015. That is why it is an income. It will be added on the 2015 but deducted on 2016 in order to counterbalance the error or to fix the error, to correct the error. And also in 2017, since it is an income, we have 150, we have to add it. And we also have to add it on the retained earnings in this column, so 150. Now, we have now to compute the adjusted amount. So I compute it on per column. So first, we have for the year 2015 net profit. Oh no, it's a net profit. It is a loss amounting to 5,850. This one. And for the 2016, we have 5,550. And for the year 2017, we have profit of 22,500. So we have a net profit for the year 2016 and 17. But in 2015, we have a loss. So for the inventory account, we have a total of, I have added 25,000, 9,000, total of 34,000. And for the retained earnings, we have 27,000 added by 9,000 plus 600 plus less 300 and less 50s, and also add 150. We come up with the amount of 36,400. And for the prepaid expense, we have 600. For the prepaid income, 300. For the accrued expense, we have 50. And for the accrued income, we have 150. That is the adjusted amount. So all the requirements has been met, and that is all for my report. Thank you, and God bless and power.